Joining me now at Post 9 is Sherry Paul of Morgan Stanley Private Wealth. Sherry, great to see you.
Great to be here. Thank you.
In what ways should we be fine-tuning or rethinking how we're invested in this market?
Yeah, recalibrate is the word of the day for sure.
Yeah.
I think there are three things that investors should be recalibrating. Number one would be your mindset, and to really get disciplined from worrying about what could possibly happen to planning for what will probably happen as the timelines around uncertainty get shorter and shorter. And we can talk a little bit more about that, but obviously we know rates are going lower, we're getting closer to elections and things like that. Number two would be to obviously recalibrate your portfolio to meet the current economic and policy environment. And then the third thing would be to recalibrate expectations about how to evaluate risk-adjusted rate of return as we go forward in this sort of innovation-driven earnings, sort of expansion. But at the same time, we're hitting new highs, and that causes investors concern. So preparing for more volatility. Yeah,
and hitting new highs both in the equity indexes and also in a balanced portfolio finally did hit a new high, too. So I guess it's time to figure out exactly what that means from here on out. So you mentioned to focus on what's probable.
Yeah.
Yes, rate cuts from here on out look extremely probable. But in what context, I guess, they're happening? In other words, do we still have to be worried about it tipping into recession or not, or how you might handle any of those scenarios?
Yeah, thank you for that. Well, we are in a slowdown, an earnings slowdown, all right, and an economic slowdown. We know that that's different than a recession, which is a contraction, and ultimately it's a reset. So probably we stay out of recession. And clients should understand that and start moving out of cash because we know rates are going lower. And if you want to guarantee yourself a pay cut, then keep your money in cash. We also know that we're probably going to see more investment banking deals go down as the cost of capital gets cheaper.
Sure.
And what we're advising clients in the portfolio pivot around that is to own that small cap type return on a big cap balance sheet. So we start to really lean into where innovation is taking place, and it still continues to be in the U.S. big cap space over small caps, as an example, which tend to not perform when we have a slowing economy, even if they get the pickup on the cheaper money.
Does that imply remaining focused on, those large tech companies that have already been recognized as being the leading platforms and the innovators to here on out? Because they have obviously taken a little bit of a backseat in the last couple of months.
Yeah, well, you should have a meaningful exposure to them. But what we're seeing this year, towards the end of the year, since June, is a broadening out of performance in the market, which investors should be cheering despite any other kind of geopolitical concerns or domestic political concerns that might be weighing on them. So it is really crucial to decouple the two and find the corridor of opportunity, and there are plenty of them in the market right now.
You mentioned, obviously, we're 6-7 weeks from an election, and, it seems to me that investors that over-fixate on policy and politics and even potential tax implications, maybe get distracted from what they ought to be doing, or maybe the returns aren't necessarily worth the effort there. How do you advise people navigating around those things?
Yeah, the simple advice is don't trade the politics. What's happening in the markets right now, the decision a company makes about raising a dividend has nothing to do with who sits in the presidency. AI, underpinnings of innovation, and that's an earnings, it's an expansion and a cost-cutting bull market that we're in, has nothing to do with who sits in the presidency. And we're probably, from a policy standpoint, Morgan Stanley's policy team in D.C. believes that we end up with, a split Congress. So in that case, that's a good hedge on whatever is getting propagated from a political standpoint about at the presidential campaign level. We probably end up with largely the same, with one big exception, which is we probably see the Trump tax cuts expire, and clients should be preparing for that now from an estate tax standpoint in particular.